thinking that all rates are going to rise. Sure, I think the spreads are going to narrow between corporate bonds and government bonds, but ultimately it's going to happen in a rising interest rate environment. And rates are rising for a number of reasons. Inflation is one of them. As the dollar starts to roll over, this dollar rally is fading. As it loses steam, the dollar is going to plunge. That's going to push rates up. And people are going to start to think about purchasing power, not just their money coming back, but what the money is going to buy. And that's going to, cause interest rates to rise for all borrowers.
All right, you have been a dollar bear for a good long while. Some of your critics have jumped on that. You wanted to buy the foreign stocks. It didn't pan out, et cetera. Some of your critics have jumped on that. But when you say the dollar rally is about to end, I don't really see any evidence of that. And when you say inflation is about to take off, I mean, I do think that there is the end of commodity deflation. I think one could make that case. I regard that as a plus. But we just got an inflation report on the consumer spending deflator. What is this, dropping at about an 8% annual rate?
Yeah, what's happening, Larry? First of all, foreign stocks panned out well for me from 2000 to 2008. They didn't do that well last year, but I think that's already reversed. If you see what's happened so far in 2009, we're back with the foreign markets substantially outperforming the U.S. again. But what you have, we've had an inflation problem all along. It's just that you have two counterbalancing forces. You have inflation, which is driving prices higher, but now you have deleveraging, you have bankruptcies, you have going out of business sales, you have a lot of temporary factors that are preventing inflation from pushing prices higher. But these temporary factors are going to give way, and all you're going to be left with is the inflation, and it's going to send prices higher. And there's not going to be any question.
Peter, China is exporting deflation in an aggressive way. I mean, China is overproducing right now. There's a tremendous amount of inventory out there. We're going to continue to see deflation throughout 2009.
There is no look. There are falling asset prices, but that's not deflation. You got to look at the money supply.
I'm talking about finished
money supply
goods.
is not contracting, and it's not going to contract. This is inflation.
I don't think there's been no evidence of inflation for the past years outside of raw materials.
Open your eyes. Open your eyes. It's everywhere.
I just don't agree, Peter. There's been raw material inflation, i.e. raw materials went up a lot in 2008. The ability of companies to generate price increases globally is almost non-existent because, in fact, you're dealing with a world labor system that has prices going down.
Price movements are not inflation. They result from inflation. So if you're fixated on price movements, you're missing what's really going on beneath the surface. But you have to focus on not only what's happening with money supply now, but what is going to be happening with money supply in the future, the cost of funding all these misguided bailouts and stimulus packages. And remember, every time we do a stimulus, it's going to stifle the economy, and they're going to want to do an even bigger stimulus.
Jeff Kleintop, one could make the argument that the money supply rising is a very good antidote to the monetary and credit deflation that we've been experiencing for the past 12 to 18 months. And Jeff, let me ask you, Peter says that the foreigners are outperforming. I'm just going to look at this from the bottom, November 20th. USA, the S&P 500 is up about 11, 12%, Jeffrey. Europe is up only 1%. Japan is up only 1%. The emerging markets are up about the same. In other words, Jeff Kleintop, are you telling your clients to go abroad? Do you think that there's going to be decoupling?
No, not at all.
I don't see the results here.
Right. No, we are completely, minimized international weightings. We zeroed out emerging markets somewhere in the middle of last year. We're very happy we did that, and we're sticking with those positions. You've got a market in Europe that is really struggling. They don't have an ECB that can create money the way we're doing here in the U.S. They can't create a good banking bailout because each country is responsible for its own financial system. Many of those countries can't bail it out. And take a look at China. Let's talk about rise of protectionism. It's coming up around the world. That's going to weigh on trade and exports. Really,
you say that as if creating money were a good thing. It's a bad. When the government creates money, they don't create purchasing power. They just redistribute it. Well, they do damage when they create money.
Sometimes you got to offset the deflation. But
no, you don't.
Let me go to Zach Carabel. Zachary, one of the hotter sectors in recent days has been the healthcare sector. And it's interesting today. The drug companies were hot as a pistol, Zachary. But you know what? So are the HMOs. And I want to ask you your take on that.
Yeah, I mean, I think there's a certain amount of trading phenomena going on here. Personally, I'm not overly fond of those going forward because even with Daschle stepping down, you are going to get some significant healthcare reform legislation, whether it's this year or the next. And that's going to be a problem for a lot of HMOs. I think it's going to be a problem for some of the drug companies, which already have intrinsic issues about these, about the going off patent and generics. They don't have great pipelines, most of them, which is why you've got these huge mega deals in the works. So, short-term trading, it's safe, it's the fact that it's received so little attention in the climate we're in is probably a good thing. And you know, back to one thing on the banking stuff, this is going to be a lot of discussion, but really, you know, we don't need the bank stocks to do well for the market to do well. We don't, you know, you shouldn't be looking to this as investors. We just need the banking system to provide a certain amount of...
Tech and healthcare are now the leaders in the S&P 500.
I know.
Banks
Again,
have come way down, right?
I just think healthcare, you know, stock-specific, sure, as a sector, there's some real issues.
Jeff Kleintop, what's your favorite play right now?
You know, I would move towards increasing a little bit of risk towards the stock market. Think about small caps here. They make a lot of sense.
You like the small caps. Give me a sector in the stock market.
Yeah, consumer discretionary and technology.
Wow. And Peter Schiff, your best investment play right now?
Well, just still get out of cash, particularly the dollar, and, you know, keeping, you know, I still like gold. I'm still buying gold. Silver, I think, at $12 is a great buy.
Which foreign country do you like, Peter?
You know, I still like the Asian economies. I like Singapore, Hong Kong, anything that's got to do with China.
All right, we're going to leave it there. Zachary Karabell, Jeffrey Kleintop, and Peter Schiff. I heard a lot of bottom fishing one way or another.